All right then, good afternoon. This is Jeff Benson coming to you from Jacksonville, Florida. Today we're going to take a few minutes and we're going to talk about one of my favorite subjects, commercial builder's risk. And we'll get into kind of what is it, what makes it different than other types of builder's risk. We'll look at some different types of businesses, different things that we insure on a daily basis, some of the nuances on the coverage form, some of the nuances on the pricing, eligibility, so on and so forth. Once again, we try to make these webinars more educational than simply just a marketing program for our product. We do weave in some of the things that we do, but I think you'll find these very useful. And we've been getting some good feedback. So by all means, we're going to run through this pretty quick and then we'll open it up for questions. But I will give you my contact information and our senior underwriters' contact information. So in the coming days, if you have questions, by all means, don't hesitate. Pick up the phone and call me. Send me an email. We get back to you pretty quick. So today, once again, we are going to talk about commercial builder's risk. And just to kind of set the parameters a little bit, the way we define commercial and residential is residential builder's risk for our program is designed is 1 to 4 family detached is all residential. So you're building a single family home, you're building duplexes, quadruplexes, all of those things are considered residential. So thus, everything other than that is commercial. We're going to get into some of this too. So commercial can be just like residential. It can be ground up new construction. It can be build outs, tenant build outs in commercial buildings. It can be simple renovations of projects. We're getting into all that. So keep in mind there are, if you're building a $2 million home or you're building a $2 million Dunkin' Donuts, freestanding Dunkin' Donuts, the exposures are pretty similar. Today I'll touch on a few things that I've discovered that are different in commercial, but builder's risk is builder's risk. Of course, the construction coverage, it's an inland marine line, so that really doesn't change whether it's residential or commercial. So keep that in mind. Some examples of things that we work on every day, and these are things that are being built across the United States. These are probably the things we're seeing the most of. You have schools, probably an equal number of renovations to schools as there is ground up new buildings being built for schools. We've seen, across all construction types, they still build some frame buildings. Most of them, though, are joisted masonry or masonry buildings, and we'll get into that in a little bit. But all different levels of schools are building things from the local grade school to state universities. We do see a lot of student housing that's submitted to us. So once again, if it's more than 1 to 4 family detached, it's commercial. So it could be habitational and still be commercial. Medical offices, see a lot of that. Hotels, probably one of our #1 things that we insure on a commercial basis in the larger projects that we insure are hotels. Those are more of the Hilton Garden Inns, the Marriott Courtyards, Holiday Inn Expresses. They're building an awful lot of those. And so those are good risks to write. We love to write those. What's interesting about that is you'll see a lot of those being built out of frame construction in the Southeast and the West Coast. And yet they will build masonry hotels in the Northeast and Midwest. So it just depends on where you're at and what they're building these things out of. Once again, restaurants, we see a lot of build out of restaurants. So maybe it's in an urban area in a big building and they're going to take 1 floor and make it a restaurant. So that's a unique exposure from commercial builder's risk. Or sometimes they're freestanding buildings building restaurants. I mentioned earlier on the franchises, so we do have builders that specialize in build outs on franchises. Could be a sub shop, a chain of sub shops, a chain of hair salons. So we have builders that specialize in that type of construction. That fits nicely into the installation floater builder's risk line of business because they're building the same thing over and over again. Probably would lend itself to some type of reporting form. So that's a good way of doing that. Warehouses and storage facilities, as always, we see a lot of that. We're going to talk a little bit about construction and how they build those and how we classify them. And I think you'll find that interesting and worth your while to listen to that. Once again, multifamily, we study, I personally study housing a lot around the United States, and usually they're divided into, 5 or less units or 5 or more units. So multifamily would be the bigger projects where it's a multi-story building, could be condominiums or apartments. So it's habitational. So you have something called permission to occupy, which is a coverage that you really need to understand to make sure that there's no gaps in coverage if they're going to occupy a building as they build it. Assisted living facilities, very similar to the hotels I was talking about. Most of the time they are built out of frame. So you might get into some high valued frame exposures on assisted living facilities. As always, the retail. One thing we're seeing a lot of today is what I call the mixed use. We see a lot of this on the West Coast where they build, maybe it's a parking garage on the first floor, second floor is offices, and then the third and fourth floors are residential condominiums. A lot of times these are mixed construction, so masonry on the first couple floors and frame above that. And in our prior, our earlier webinars, we talked about that. So if you have mixed construction, masonry and frame, how do you classify that building? And as you all know, it's frame because you underwrite to the weakest point of the building. We have prisons. Actually like to see prisons. What are they usually built out of? Usually that's concrete and steel. So I would say those are some of my favorite risks. We won't talk about why we're building them, but they are a good exposure to have. Churches, we see churches every day. One of the concerns we have that I've experienced over the years with churches is funding. So a lot of times they tell you it's a 12-month project, but 9 months into it, they run out of the funding. So now the 12-month project is the 18-month project is the 24-month project. So just make sure you understand that going in, and the underwriter that you're working with understands that, because there's a good chance you're going to have to extend that project because it's probably going to take longer than they think it's going to take. Let's talk about construction types, and this applies residential or commercial, but it's critical in commercial because I've seen, even here in Florida where I live, as I drive around, I've seen all of these different types of constructions being used for commercial buildings. And it's kind of funny how there's one being built right next to the other one. One's frame, one's not frame. Frame is just that. These are the frame apartments you see being built everywhere, the frame retail strip centers that are going up everywhere. These are all frame. So you have frame walls, frame roof, all the load-bearing materials are frame. Pretty simple, it's frame. It's the highest rated construction type that we have. And it leans, it burns down, simple as that. It's not as stable. I mean, it's not as fire resistant. Interesting enough, though, on the West Coast, primarily in the earthquake zones, the frame performs better than the masonry buildings. So you see a lot of frame construction on the West Coast. So as an underwriter, you just have to understand that's what's being built. Joist and masonry, that's a construction that was used 50 to 100 years ago. That was probably a dominant type of construction type. These are masonry walls, load-bearing masonry walls with a wood framed roof as far as the trusses are wood. So a lot of the older buildings, that's the way they built them. They are better than frame as far as fire resistance, but not as good as some of the other construction types. The third one you see is non-combustible. We just had one submitted just a few minutes ago. I was looking at it. It was like a $4 million aircraft hangar, and it was a true non-combustible building. We see a lot of this in rural areas. Non-combustible is a little bit better than frame, but not a lot better than frame, simply because if they do catch on fire, they have a tendency to warp, and a lot of times they're a total loss. And many times the non-combustible buildings don't fare so well when the wind blows. So it's just important that you understand what you're dealing with in commercial, because the values do grow pretty substantially. So the last three I want to touch on real quick, and this one up here on the top is one that we're starting to see more and more of, and it's called superior non-combustible construction. I've also heard it referred to as ISO 8 construction. We're starting to see car dealerships built out of this, even some of the heavier duty warehouses. These buildings do very well in the wind. They have high fire resistance. You're going to need to work with your underwriter on exactly how you rate these. But I will tell you the way we look at this is it's much better than frame and probably approaching masonry non-combustible quality. So this is, as long as it meets this criteria, that's where it is right there. That would be a superior building to either frame, joisted masonry, or non-combustible. The next level up would be superior non-combustible. And if you have any doubts about how to classify it, by all means, give me a call and I'll walk you through it. These things are, I always like to laugh about the construction types. It is what it is. It's not really a negotiation. You just have to be able to show, here's how they build it, and it's, there's builders that specialize in this superior non-combustible. I've done a lot of research on this, and they're starting to even use that in their advertising. And the builder will say on their website, we build superior non-combustible construction ISO 8 type buildings. The next one is masonry non-combustible, probably the #1 commercial type of construction that you see when you're, if you're seeing a new restaurant being built and you see the metal supports go up and then the masonry walls go up, that's masonry non-combustible. One thing we see a lot of in the Southeast is tilt-up construction. So you tilt up the concrete walls. They have a metal support roof that ties it all together. That is masonry non-combustible. So 9 times out of 10, if they say it's tilt-up, then it's masonry non-combustible. And fire resistive is the last. As you're in an urban environment and they're building a skyscraper, that is a fire resistive building. They perform the best in fires. Unfortunately for us underwriters, though, it's very competitive in the superior construction classifications, and so you see very, very low rates, especially in inland areas. So you have to have an underwriter and a company that understands that. Interesting little fact too. So in frame construction, as the value grows, the rate grows. There's less competition on high valued frame, so you'll see a much higher rate as the building values grow. In superior construction, it's exactly the opposite. As the values grow on a fire resistive building, the builder's risk rates are going to go down, and you're going to see more and more people wanting to write that. So there's a lot of competition. And like I said, especially in the inland areas, I will put a little plug in there that we have some very competitive M&C fire resistive rates. So keep that in mind when you have those type of risks. Sometimes we get into, in residential builder's risk, I've always told you the best way to ensure a home being built is the selling price minus land. If you do that, we're going to be off and running, everything's fine. It's not quite as simple for commercial builder's risk, because many times there's a lot of other factors that go into the building of a commercial structure. So these are some little tips that I put out there, but the entire scope of the project needs to be fully understood. When I say scope, if it's a renovation project, you need to know everything they're going to do to it. And then you also need to understand, as they renovate a building and they tear down walls, they're inevitably going to find other things they need to do. So a lot of times the scope of that project is going to grow dramatically. I cannot stress enough that as you become aware of that, you need to contact your underwriter and say, I really thought it was going to be $1 million renovation. I really thought that was not going to be structural. Now it's $2 million, and they're going to have to replace the load-bearing walls. So you better go ahead and tell your underwriter so we can underwrite the account accordingly to make sure there's no gaps in coverage. All of the things that are included, covered components. If you do run a manufacturing operation, sometimes you can have very high values on the equipment. So that's something you need to make sure it's insured properly. And that's a pretty tricky class of business to write just in itself. So we see a lot of that submitted, and you really do need to underwrite that carefully. And then you think of all the common areas around a commercial building, from the parking lots to the landscaping. We see solar panels being installed on top of these commercial buildings. All these things, fairly unique exposures, and you got to make sure that they're insured properly. So just take that in consideration. Some of the coverages, other than the standard builder's risk coverages, that I think you definitely need to dive into and understand. And for the sake of time today, we're not going to go through all of them. I'm just going to kind of list them. But delay in completion, business income, and loss of rents. Obviously, if we have someone building a rental property and they're going to rent it out, and because of a covered loss and because of a peril that's insured against, there's a claim, there's going to be a loss of rents due to the delay in completion. So you need to definitely make sure that that's taken care of. Testing, you have cold testing, hot testing, testing of building systems. All of this needs to be taken into consideration because even though it sounds like a smaller coverage, there can be a fairly substantial claim if you're not careful. Soft cost, really a function of the delay in completion. So little tip on the soft cost, and we'll get to that in a minute, but just there is a way of kind of calculating what their exposure is, not just guessing. So a lot of times when you guess on what the limit should be, that's when you get into trouble. So I'll show you how we can get a little closer on what limits actually are the proper limit for an exposure. Permission to occupy, obviously that's a big ticket item. You're going to have a strip center and it's going to be occupied as you build it out. You got to make sure there's no gap in coverage. Some forms say once it's occupied, there's no coverage. So you do need to read the form and talk to your underwriter. Contract change order, you see a lot of that in commercial where things change as the project goes on, becomes, like I said, the $1 million project all of a sudden is the $2 million project. And obviously that has ramifications for co-insurance and other things of that nature. Expediting expenses, you hear that talked about a lot, but make sure that's covered. Historical tax credit, if you write any historical buildings, this is a very needed coverage. It's expensive coverage, but it is definitely needed. And carriers that specialize in historical properties, well, we'll help you walk through that. And then the two other major coverages that we know we always have to have are flood and earthquake. And so I think that kind of sums it up a little bit on that. We'll talk about that in a minute. Pricing, let's talk about how we get to a builder's risk price on these things. First of all, it's always the coat, right? What is the construction? Is it superior non-combustible? Is it joisted masonry? Is it frame? You got to be very clear on that. Makes a big difference. Next thing would be the protection. What's the protection class, the ISO protection class? Some of these commercial buildings you think are all protected, but maybe they're built on the outskirts of an urban area and it might be unprotected. We had one submitted the other day. It was a $10 million building, masonry non-combustible, but it was protection class 10. We actually quoted it, but it's much tougher to quote those high valued unprotected buildings. So just make sure you understand that. And also the intended occupant has a lot to do with the permission to occupy and how they make a charge for that. So some of the other modifiers that the underwriter will look at is especially if you're doing renovations, obviously they're going to look at the existing structure to make sure it's structurally sound. They're going to look at the condition of the premises. A picture is worth 1,000 words. So it's pretty easy to get a picture of a building today. You simply Google the address and the building pops up. So we do get some interesting ones submitted. I'm kind of looking at the picture and I'm leaning one way or the other. So if I lean about one way a lot, then the building looks straight. Obviously, that's not what we're looking for if we have a structural situation going on there. So we do have some of that going on. So on the commercial side, as the values grow, you're gonna find that there's less and less players on this, just simply because of capacity. So in the smaller values, you have your regional carriers and a lot of the personal lines carriers will kind of dabble in the commercial. But as you get into the 10, 15, $20 million commercial structure, then you get to the more of your standard companies that you've heard of that are in this space. So just keep that in mind. So make sure you have access to those markets. If it gets very large, you might have to get on a layered approach. I don't know if any of you have worked on that. We do some of that here as far as excess of loss and some quota share stuff. So I mean that is available, and that is something. Don't let it scare you too much. I mean the reinsurers use some language that I wasn't very familiar with, but once you start figuring it out, following form and things of that nature, it's not that complicated. You can figure it out. You do need to understand the coverage terms. I put that in there simply. So what we have a lot of times, if let's say a builder is building something for a municipality, so you have these bid specs on the municipality. You got to understand that they require certain wording, they require certain coverages, certain deductibles. So make sure you understand that, because you don't want to sell them something that doesn't meet those criteria. So that's the other thing. So a lot of times we have risk managers involved. I always like to laugh and say they're justifying their existence. So they will say, they'll ask for certain coverages that aren't very reasonable, but if they're in the bid specs, they are the bid specs. You have to do that. Always provide loss control contact information. Most of the carriers that play in these larger commercial projects do want to be involved in loss control. Obviously, if it's ground up new construction, there's nothing to loss control in the beginning. But as the structure is being built, they might want to do a loss control halfway through to make sure. A lot of times that's when we catch the construction types. The agent told us it was masonry non-combustible, and our loss control guy goes out there 6 months into it and sends me a picture and says, I think this is a frame building. So that changes everything. Work closely with your underwriter. So, I keep stressing that as you become aware of something, pick up the phone and call them. This is a little more individual risk underwriting than the class of business it is for residential. So you really do have to have a rapport with your underwriter. And the advice I like to give you is, I have agents say, what should I tell my underwriter? I'm always, well, why don't you tell them the truth? That's a novel idea if I tell them the truth. So just tell them what you know. And I think it'll go a long way to helping you out. Some of the submissions I'm going to talk about a little bit, because, we talk a lot about our portal. The smaller commercial projects, which there's a lot of them out there, they fit nicely into a portal environment, a website. You can enter the information, hit a button, get a proposal, hit a button, get a policy, we're fine. But these bigger ones are going to require a little more lead time. They're going to require some supplemental applications, and they're going to require a little more underwriting, a little more work on your part too. The scope of the project, I cannot stress that enough. You can get that off the engineering reports. You can put it in your own words, but by all means, give as much information you can on the scope of the project. Soft cost worksheet. I stress that because a lot of times we'll have a $2 million building submitted and they want $2 million in soft costs. And so I'll ask the question, why are you asking for $2 million soft costs? I get a response like, I just thought it would be nice to have. Well, this is an expensive coverage if you're going to start talking about those values. So probably a better approach would be, why don't we sit down with the insured and do a worksheet and determine what soft cost is actually needed. So usually with a commercial project, around 10% of the value of the building is soft cost. So $2 million building is going to require about $200,000 in soft cost. That'll probably handle it. That's just a general rule of thumb. But to be safe, fill out the worksheet, come up with a number, and then we'll go off from there. Timeline and schedule. Obviously, this ties back into delay and completion, but I'd say you need a very detailed timeline, which they have on these projects. If there is structural changes or work being done to existing building, you're going to need an engineering letter. You're going to need information from the architects. Before an underwriter will even consider writing it, you're going to have to provide that kind of stuff. And a lot of times with the commercial projects, what an underwriter is wanting to do is underwrite the builder. Have they built this type of building before? If it's a guy that's only been building freestanding Starbucks for the last 10 years, and now he's going to build a giant high rise, that could be a problem. So it's always about what have they built in the past, look at their resume, provide all that information up front, even if it's links to the website. That will help the underwriter make the right decisions and hopefully get the right coverages and pricing for you. Well, that was kind of it in a nutshell. Took about the right amount of time. So put my contact information up there. There I am. Donna Berry is my senior underwriter. So Donna and I are available anytime. Give us a call. Send us an email, however you want to get a hold of us. You can go through our website too. That's great. We'd love to hear from all of you. And what I'd like to do now is just turn it over and see if we have any questions. Alex, are you out there?
Sorry, Jeff, it seems like we have a little technical difficulty.
Okay. Yes. I felt like I was on an island out here. So what was going on?
We may have to do questions after. You may have to follow up for questions.
They want to do that. Should they just submit them, email them, or how do you want to do it?
No, if anyone has submitted a question, we have note of it, and we can send it to you to follow up with, or to follow up on.
All right, we have their contact information.
We do.
All right, fantastic. Well, sorry for the technical glitch, guys, but here's what we'll do. If you've submitted a question, I personally will respond to it. And as always, if you have any questions, sometimes one comes up later today or tomorrow, there's our contact information, and do not hesitate to call us. I greatly appreciate your time today and look forward to hearing from everybody. Have a great day.